Many of you have asked me for an update on Visa and Mastercard. Those stocks are down 12 to 14% year to date. That doesn't happen very often. I'm a big fan of Visa and Mastercard's business models. And whenever someone asks me, what is the best hedge against inflation? Should we be buying gold? Should we be buying oil or commodities? And I tell them the best hedge against inflation is Visa and Mastercard. And everyone goes crazy and they ask me why. Well, this is because their business is indexed to inflation. So if they collect a transaction fee, let's say 1%, but the transaction amount is up 10% due to inflation, Visa and MasterCard will collect 10% more without having to raise their fee by a single basis point. And this is what happened to Visa back in 2022, 2021. They grew much faster in earnings per share as a lot of the prices were getting more and more expensive. And this is something that could potentially happen again over the next 2 years with higher oil prices and many different things. But Visa and MasterCard, they're starting to get really interesting. Visa is trading at 23 times earnings. It hasn't traded there before the 2022 bottom. And same thing with MasterCard, which people believe it's a little bit of a higher quality, faster growing company, is trading at 25 and a half times earnings. So both of those stocks are starting to get very, very interesting. But my main argument against Visa and MasterCard is that yes, they're getting more interesting, but those companies are facing some scrutiny and some risks that they haven't really faced before. Therefore, they should be trading at a lower valuation than they were trading at before. And I'm going to talk about 2 or 3 of those risks today, and then I'm going to give you my upside potential and valuation in general. Now, the first one, and this is a big one, is mainly the whole credit card swipe fees. There's some kind of a legislation they're working on it, like a bill, but it's getting more and more scrutiny in the United States. And this is a really big one, because if you compare the swipe fees that they're being charged in the United States versus Europe, it's not even close. For debit cards, for example, in the EU, they're capped at 0.2%. In the United States, is between 0.8 to 1.5%. So the EU pays 4 to 7 times lower than what we're paying in the United States. Credit cards is a big one. In the EU, it's capped at 0.3%, but those companies in the United States are charging up to 2% on average for those swipe fees. So Europe is paying 6 to 10 times lower than what we're paying per transaction in the United States. And this is a bipartisan issue. The Democrats agree on it. The Republicans agree on it. So if anything is done to cap those fees or anything that's done around it in the United States, it could pressure those companies' margins with a very large chunk of their profits, not revenues, coming from the United States. So this is a really big one, and it warrants some kind of a multiple contraction from the peak for a lot of them. Now, there's a second one, which is also a concern. I would argue it's a bigger concern, is mainly a lot of different countries, like even India found an alternative, and other countries and places that they're trying to find an alternative to Visa and MasterCard. And those companies are really exposed to international revenues. For example, if we look at, I believe this is Visa, 16 billion comes from the United States, but 25 billion is international revenues. If we look at MasterCard, about 8.3 billion comes from the United States, but $16 billion is international. This is much more than what Visa is exposed for. MasterCard is mostly international, and that could be a little bit of a concern with what a lot of companies, I should say a lot of countries, are trying to do. And mainly in Europe, around 18% of Visa's revenues comes from Europe, and about 30% of MasterCard's revenue comes from Europe. And Europe very recently has been, you could say, discussing trying to have their own systems. And the ECB president said that Europe needs its own digital payment system urgently. Now, they've been saying it for 10 years, but a lot of events have happened recently that's making them want to do more and more initiatives and try to get there a little bit quicker. And again, I don't really blame them. And they said Visa and MasterCard together, they process approximately 24 trillion in transactions annually. Card payments account for 56% of all cashless transactions in the EU, and the data of who bought what, where and when, and for how much leaves the European jurisdiction every single time. It's important for us to have a digital payment under our control. And the main concern here is whatever you could say really happened in Russia whenever they restricted a lot of those economies in terms of Visa and MasterCard. It was shut off overnight, and they talked about it here. And they don't want the same thing to happen to them, and other countries want the same in case something happened between the United States and their countries. Maybe they're going to shut them off. So they don't want to be 100% dependent on Visa and MasterCard. They want to have their own alternative, just like India and a few other countries have their own alternatives. There's nothing wrong with that. But again, it's going to pressure Visa and MasterCard, mostly MasterCard, with 30% of its revenues coming from the EU. I'm not saying if the EU comes up with an alternative, the 30% will be entirely wiped out. Some people will still prefer to use Visa and MasterCard, especially when they're traveling, when they're doing something. But maybe some people will want to use their domestic EU systems if they're from the EU, and that could, reduce a little bit of the revenues. So that's another, again, headwind that's happening right now that hasn't really been a headwind before for Visa and MasterCard. The third one, and this is the last one, and it's mainly the whole stablecoin agentic related disruption. And again, this is mainly from the Citrini report, which a lot of you, I believe, read. And this is mainly how the payment system is changing, and it could change much, much more with the adoption of stablecoins and a lot of the agents. So whenever, right now, for example, you're buying something, you might be using a Visa or a MasterCard card. This is the network. It goes to the bank. It goes to the merchant. Then it's just a payout, and then they collect the fees. This is how it's done. And maybe you prefer to use your card to get your cash back, to get something else, or you just like your card in general. Now, this is entirely different based on the Citrini report. If you have, let's say, an agent that's doing the payments for you. So if you tell your agent on, let's say, ChatGPT or whatever, I want to buy XXX, whatever, and you want to buy this item, ChatGPT is not as emotional as you are. Maybe they're going to try to find what is the cheapest alternative for you to make this payment. Maybe the cheapest alternative in this case is stablecoins. If it's stablecoins, then you're somewhat bypassing the traditional payment rail, which is Visa and MasterCard, and that will save you a lot of money as a customer. Right now, you're paying about $2.50 for the transaction. Well, if you're doing the stablecoin with an agent, you could pay like 1 cent or 2 cents maximum for the transaction. So you're saving a lot of money, especially if you're making more frequent orders and larger orders in general. So that's, again, for the very, very long term. But it could also be somewhat of a concern. Although those companies are not stupid, they know that. This is why MasterCard acquired some kind of a stablecoin infrastructure company, and they're trying to expand there. Visa already has a dominant position in stablecoins. MasterCard is trying to join the party, and they want to own more of the rails, and they just want to maintain their dominant position against stablecoin. So this is not as big of a concern for me as it is for the legislation in the United States, when Visa and MasterCard are charging 7 or 6 to 10 times more for those transactions in the United States versus the EU, and also with the EU, again, trying to find their own alternatives, and MasterCard having 30% of their revenues coming from the EU. So those are two big concerns for me, much more than the stablecoins, and for me, they warrant a multiple contraction on Visa and MasterCard. But I believe, based on the multiples today, of about 23 times earnings for Visa and 25 times for MasterCard, I think most of those risks are priced in. Just a few months ago, MasterCard was considered the highest quality company in the world, and it was trading at 35 times earnings. There was a lot of FOMO. Well, now it's trading at 25. Same thing with Visa. It was trading at 30 times earnings. Now it's trading at 22, 23 times earnings. So a lot of those things, in my opinion, have gotten priced in, and those companies are not going to stop growing anytime soon. People always ask me which one is better, Visa or MasterCard, and I always tell them it's up to you. But I believe MasterCard will most likely outperform Visa, as it has been growing and is expected to grow 2 to 3% faster than whatever Visa is expected to grow. Like MasterCard is expected to grow 15%, Visa 13, Mastercard 16, Visa 12.5. So I believe Mastercard will likely outperform. But for me, I like to buy cheaper stocks in general. So if I had to pick one, I would pick Visa. And with Visa, you're also getting less exposure to the EU. And again, this is as of 2023, but you get less exposure to the EU, almost 50% less. And you also get a dominant position in stable coins. So for me, Visa looks a little bit better over here, but MasterCard is also not bad at all. And they have a great alternatives to cybersecurity business that's growing like 20% plus. So both of them are good companies. I think both of them are undervalued. I would expect the returns from here to be pretty close to their earnings per share growth. So if MasterCard is going to grow 15 to 16%, expecting no further multiple contraction, I would expect 15 to 16% annual return. For Visa, I would expect 12 to 13% plus the dividends, so maybe a 14% annual return. So I'm not saying life-changing returns from Visa and MasterCard, but I think those are amazing companies trading at a discount and they're really great long-term investments. And that was just my opinion on those stocks. It was not financial advice. So I hope you enjoyed it. If you did enjoy it, please press the like button and maybe consider subscribing. So I'll talk to you in another video.